The market is looking terrible. 2021, did you expect the sell-off was going to be so bad? Due to one word called the inflation. And to be honest, everybody is confused as well. Where to buy, where to go. The Dow Jones has dropped, the Nasdaq has dropped, the global market will be falling. So what's really going on with this inflation? To be honest, when you look back at 2020 sell-off, it was far easier to make a decision. You knew there was COVID-19, you knew things was going to go really bad. What do? Sell off. Take cash, wait for the recovery, buy back in. But now in 2021, what do you do? Inflation, is it real? Is the data real? Is Fed going to increase interest rates? So in this video, I really want to cover four things, four sectors of areas. So it's what to trend with, what are the fund managers buying on this inflation data, what you should be holding even though the technology stocks being better, what you shouldn't be holding at all, those high growth multiple stocks, and I show you how to find them, and also what to trade, swing trade, not into details, but at least I tell you what area of avenues that you should be looking out for. But before we go into that four key topics of this video, I just want to explain about this inflation really kicking up the ass of the market itself. So what is this inflation really doing? Okay, so inflation is data by book gives three good ways to three key sectors. Okay, inflation means things getting more expensive. When things get more expensive, things that you need, especially like the likes of oil, basic materials, staple consumer of food, drinks that you need day by day, things that human beings need on a day-to-day basis to get around, things that you have to pay for. So those things will make money. Anything in that sector, the stocks in that sector will make money. However, when you spend all your money on these three key items agenda, then anything else for growth stocks, for luxury, for consumer, for travel, things will reduce, get more expensive. You might less likely go out to eat, go to buy an iPhone. Those things will get more expensive, less likely to spend. So those areas of growth stocks will go down. So let's not assume that we're going to go into a full recession or depression mode, because I am still hopeful for a V-shaped recovery. V-shaped recovery meaning why? Alex, why are you so optimistic about this? Think about it. Okay, there's still money on the sidelines. Hedge fund managers have pulled their money out. They're waiting to go in, but they're not gone in yet. They're all waiting for somebody to take action. Even when I watch on CNBC, fund managers are confused where they should be going for. And funny enough, today, fund managers were calling for Twilio. Should we be buying the Twilio because it's cheap? They're calling it cheap. It's a growth stock of high multiple. They're calling Peloton. Should we be buying back into Peloton because it looks really cheap despite all the treadmills that's been banned? So folks are talking about this CrowdStrike, all this hypergrowth looking really cheap just now. I'm surprised to hear that on CNBC today. So something to think about. And the second thing is, we are coming out of a pandemic, we're coming off a post-war, but we're coming out richer than previous pandemic and previous war because of all the stimulus check, all the helping, all the aid with government funding, and all the sidelines, retailers making money on the stock market and cryptocurrency. So we're actually coming out a lot wealthier than we were behind 2019, 2020. So this is some areas of avenue we should look out for, because when data is there, especially Q1 earnings looks good, potentially we'll see a recovery. Maybe not a jump up, but slowly to move up along as we go along before. Okay, let's most important one. What are the trending? What should you be looking out for if you want to start rotating? Okay, if you choose to rotate, if you choose to go with the trend, what you should be looking for. So there's three key ETF that I look up for, because I'm a tech investor. I don't want to pick and choose all these materials, oil companies. I go these three ETF. One is XLE. So it's all these major oil companies that I have already bought in about 2 months ago. So XLE, if you want to go into oil, you want to hedge your portfolio a bit to go on the rise, then put some money in XLE. Second one is XLB and XLP. One is consumer, one's basic material. So basic material covers oil, tin, iron ore, and everything else. And then you've got XLP, consumer staples. Okay, anything like basic materials, consumer staples, company associated with it. So these three are the ones that's going up. Those three are the ones that tech investors or even hedge fund managers are actually using as a hedge, as a safe hedge haven, just to go with the flow of inflation if it does go wrong, rather than stock pick. So that's the three key ones, and check it out yourself. What not to hold, okay? What do you not to hold? Okay, well, I'll give you a link. Okay, a link is called hypercharts.co. I use it. It's free to use. If you want to sign up, it's up to you. It's free to use. You can go click on multiples. I'll leave the link below, and we click the multiples. It goes from the highest multiple to the lowest multiple. If you can see on the chart, the highest multiple, you can see the likes of Lemonade. You can see the likes stocks, Coinbase, you can say Crispia, Virgin Galactic. These are multiples in more than 100. So, okay, some of them goes over to 800, 900,000. Those are ridiculously high, okay? Those multiples means low cash flow, low revenue, but so much hype because everybody's buying in. So those are the stocks that you should be aware of, you should be watching out for, because if inflation data gets in and in more and more, you should see these are the stocks that will fall first, okay? These are the stocks that people pull their money out. For example, Virgin Galactic, all the hype, all the ETF hype by ARK Invest, and guess what? They sold all their space, Virgin Galactic, like today. So it goes to show everybody's afraid of high multiple growth. It's good because no cash flow, no low revenue, people do not want to hold unless they change their fate, unless they jump straight in, like Coinbase earnings might come out. Roblox earnings just came out yesterday and they show they have great revenue, and this will decrease the multiple. If you don't hold those companies, don't expect high revenue coming soon, maybe you should think about holding less or not holding at all. What to hold? What do you do? For me, I hold Fiverr, I hold AMD, I hold Nvidia, I hold Tesla. So what are the key stocks I hold? I don't hold many stocks. I hold 5 key great stocks. So what do you hold yourself? You don't have to follow me. You have to check it out yourself. Again, you can go to hypercharts.co. It's great. Look at Tesla's revenue. It's just going up in a straight line. Look at Apple's revenue. It's going up in a straight line. Look at Amazon's revenue. Okay. Look at Fiverr's revenue. Look at Pinterest revenue. I can go on, guys. I can go on. If you own companies with revenue charts like this that is still growing, despite the fact that you overvalued for the likes of Fiverr and Pinterest, but if they're growing, that's where they go. It's all about the business. Focus and hold the one that's good business value. I have seen Netflix, I have seen Tesla, I have seen Amazon in the past, okay? High multiples between 2012 to 2016, 2018. And guess what? Look at the historical charts with interest rates. They will still go up. Invest in great, brilliant companies with high revenue growth and good cash flow. It's easy. But this is where look for the pattern, look for great quality companies and make your life easier, minimize your portfolio and just focus on the great ones and buy on the dip or dollar cost average on the dip. Keep it easy. Okay. Finally, the fourth one, what to trade. Okay, for me, I like swing trading. If you got spare cash, swing trade. I do it in eToro, but recently, month for me, not very good. So what do you trade? Trade the one of high momentum, okay? The ones that go double digit, triple digit. So some of the stocks like Lemonade sitting at 64, I think that's a pretty too low. I know Lemonade is overpriced, but if the earnings, if they do well, Lemonade might shoot up. Look at Roblox. It's one of those. Roblox, Coinbase, they were down 25, 40%, and now earnings come out, they beat revenue, they jump back up. So those are the ones that you don't own, but you just want to, that it's cheap. Like the likes of Twilio, they are cheap. The likes of Zoom, they're cheap. If the earnings come out, if they beat it, boom, they shoot up. So don't be loyal to this company. Buy them low, shoot up, sell them off. But do put like a 10, 15% stop loss. If you buy it and if it still goes further on, give it up. Lose the 10%, better than you losing the next 50%. Because if they do break the bottom layers, there's a good reason why they should be going lower. So play swing trade if you know what you're doing. If you don't have the money to risk it, do not risk it. Okay, just wait with cash or buy and hold great quality companies. So take care. Please leave a comment below. Please tell me what you think. If you've got anything that you want to share with me, please leave a comment or join me in the Discord channel and we can speak more. Thank you, take care, and have a good day and invest safely.
I hope you enjoyed that video. If you want to see future videos, please subscribe to the channel and press the bell button. Bingo! More videos. Bye!